Hello, listeners, and welcome back to another episode of Cognitive Dissidence. As usual, I'm your host. I'm Jacob Shapiro. I'm also a partner and the director of geopolitical analysis at Cognitive Investments. Rob and I are back at it for our weekly chat. This was a particularly good episode. I would encourage you, most of you actually listened to the end of the podcast, but if any of the early topics are not of interest to you, the conversation that we have at the end of the podcast around minute 43, 44 about Colombia and Chile, and specifically about lithium, I thought was a particularly good conversation and particularly eye-opening and interesting. Listeners, I want to thank you for bearing with me. It's been a rough couple of weeks just generally for me between getting sick and some personal things that have been going on. Next week is another rough week for me, and then things will finally start to get back to normal. I'm not traveling anywhere for a while. I'm back at my desk. I'll be able to pick up on my to-do list. We have mostly kept the podcast cadence going through that whole time period. I'm going to continue to try to, but I apologize that we've been a little off with the cadence recently. And as soon as we get past next week, the cadence will be back. We actually have several very interesting guests and episodes coming up that I'm excited about to do more with. So thank you for bearing with me. Sorry it's been a little all over the place. You may have not even noticed because my producer is so good at filling in the gaps, but really interesting episodes to come, and glad you are listening. Otherwise, if you haven't yet filled out the survey that we have in the podcast description notes, that would be immensely helpful. Also, I haven't asked in a while if you haven't left a rating or a review of the podcast, wherever you're listening to it. That's a great thing to do. It takes a couple seconds of your time. It's helpful for us and doesn't cost you anything. Last but not least, if you want to talk about CI's wealth management services, we actually talk about some of the differentiators of those services in this week's podcast. Or if you want to talk about the research services that we provide, or you just want to talk about whatever's interesting you right now or what books you're most interested in, feel free to shoot me an email. It's jacob@cognitive.investments. So without further ado, cheers, take care, see you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. Rob, somehow we made it through another week. I have so many jokes here to start. Usually I'm in search of like the funny lead, and I have so many jokes I don't even know which one to lead with. I guess the first thing is I should apologize if I have a stomach emergency like Erdogan in the middle of this podcast. So if you hear muffled microphone sounds, and with my health history recently, I'm probably going to get this Turkish stomach bug that seems to be metastasizing through the world. It's good to be with you, Rob.
We could always do an A/B test. We'll do a different joke for different audience segments and see which ones land the best.
Well, and it's been kind of a crazy week for me. So I've been all over the place again. I was in rural Mississippi because my wife's grandmother passed away. That was a geopolitical experience in and of its own right. We get to the Mississippi Welcome Center on Monday, and the Welcome Center itself is closed in commemoration of Confederacy Day, which is interesting in and of its own right. And I took a picture of it and posted it on Twitter. Also, apparently, it's two sentences, and the punctuation was very confusing too. There were commas in places there shouldn't have been commas, and weird capital letters. But apparently Confederacy Day doesn't mean you can actually do things, or you can't actually make things right. And of course, construction workers working on this on the highways were working, but the Welcome Center was closed. Anyway, we don't have to go into that whole thing. But I have jokes in part because I have not been able to dive or sit with the news flows as much as I usually like to this week. And I was up this morning with the baby, who was up early, of course. And I don't normally do this. Usually I like to read, hours every day to get my situational awareness, but I had the baby. I couldn't be reading. So I was like, all right, I'm going to turn on some news and see if I can't, sort of jumpstart the process of getting back into the flow of information. And I went to Channel News Asia. They're running a feature on how in Japan restaurants are cultivating or trying to go after solo customers because they spend less time actually eating there, so you can turn over the tables quicker and it's better. And I'm like, okay, that's not that interesting. Go over to Sky News. We're focusing on somebody who created some kind of life-size picture of King Charles made out of chocolate and different chocolate bars. Okay, so that doesn't really work either. I go to French news, and they're talking, Macron's giving some speech about the evils of slavery and commemorating the end of slavery and things like that. go to CNN, and it's a brief thing about U.S. GDP report, and I literally felt like I was watching the Hunger Games, and then it was like, and now the NFL draft is tonight, and this is the most watched thing in all of history, where all the Americans come and watch their gladiators get picked by the different teams. Hooray! And then I turned it off because I felt like I was getting dumber, not smarter, when my goal was to try and figure out what's going on in the world. So I don't know. I'm leading off with that just because like I then had to go and do all the reading, and it's I usually complain about U.S. media, but man, nobody's covering anything that's actually important out there. Even the news channels are not covering things that are important out there.
Is this your long-winded way of saying that you don't have any brilliant news-related insights for us this week?
Oh no, I do, but I had to go read as fast as I could on 3 cups of coffee to get through everything, because apparently there's not one, heaven forbid we should have a 30-minute news program that goes through like the most important news of the day that you can turn on at 6 o'clock in the morning and feel a little smarter about the world. That's not there, but I shouldn't have sour grapes, because that's probably why people listen to this podcast in the first place. But let's go in a little bit with because I know you've been thinking a lot about U.S. macro, and I think U.S. macro is driving lots of things. The big sort of top line news this week, well, it sort of changes every day, but GDP growth was 1.1%. That's a significant slowdown from previous quarter, but we're still in growth. Unemployment claims, though, are still at historic lows, and consumer spending was up over 3%. So everybody's looking at each other confused and saying, okay, well, GDP growth is slowing and consumers are spending more, and jobs are just sort of sitting there at that historically, or I should say, unemployment claims are sitting there at that historically low level. And so everybody, Bloomberg and see all these things, they're all just looking at each other and saying, well, we can't explain this, so let's cut to the NFL draft or to Chocolate King Charles. So Rob, let's cut to you. Can you help explain this, or are you going to tell me that there's a chocolate version of Macron that you've been eating from in Paris?
Oh, well, Chocolate King Charles sounds like an easier nut to crack than the U.S. macroeconomy, but I'll take my best shot. So here's what we're seeing that's new, and here's why it matters, right? It matters because the business cycle matters in the first place, but also because of interest rates and inflation. Because the big debate going on right now in markets is when and how much is the Fed going to start cutting rates? And that's a big, big deal, not only because of interest rates per se, but also because of currencies. So the euro had dropped all the way to below parity at the end of last year. It's now above 110 again. It's rallying because everyone is expecting U.S. rates to fall and Europe is having a rebound. So there's geopolitical connotations to all of this, but just focusing on the U.S. side specifically, here's the situation. So there's been a lot of data coming out, and the GDP is such a backward-looking measure that, to be honest, real investors, no one ever thinks about it or looks at it or cares about it very much. So it's not something that you see analyzed too often, but it is indicative of where we have been. And I think this is really important because everyone is looking around and saying, when is the recession coming? The consensus, as we mentioned last week, is that we're going into a recession. And yet, if you look at the numbers, for 8 or 9 months already, the cyclical elements of the economy have already been depressed. So if you look at the PMI, the industrial PMI manufacturing, that's been in contraction territory since last summer. Business investment has been in a slowdown over that same time period. Inventories, if I had $1 for every time I mentioned the inventory cycle on this podcast, I might have like $7 or $8. But inventories have been really depressed, as we've said. So the inventory cycle is at a nadir in the US. Businesses have been shedding inventories, and that's a big driver of the overall business cycle and demand. So all of those things have been falling off. And the odd man out here is that employment has not really responded. And the reason is because the consumer has been really strong. And there's sort of a chicken and egg thing here because the biggest driver of consumer spending is employment and earnings. Um, and employment and earnings are staying strong, which is keeping consumer spending, which is helping to give businesses the confidence to not fire their employees. Um, I know that's a bit of a circular logic, but nevertheless, it is what it is. So where do we go from here? I think is the most important question. Where are we now? All of these things, as I said, these cyclical things are depressed in the US. And there was a piece that you put on the Knowledge platform an hour or two ago about how the bulk of inflation has shifted away from goods and away from food and hard things toward services. And this is the big problem. And this is, we've said multiple times that we are much more hawkish about rates, and we're much more hawkish on inflation. We think inflation is probably going to level out at a much higher rate than people assume. And this is a big part of the reason is services inflation has been really resilient. That's driven by labor costs, by a tight labor market, by labor shortages. That's not changed despite all of these things. And now we're seeing more and more signs that maybe that was the downturn that we just experienced. So just in the last week, just to put some meat around that, look at all of these big consumer companies that are reporting. So just in the last 2 weeks, you had Procter & Gamble, Hershey Chocolate, Kimberly-Clark, which makes diapers, Coca-Cola, all of these big behemoths of the stuff you buy in the supermarket, right? And the common denominator is they all beat earnings. They all raise their guidance for the year. All of them are posting revenue growth of like the high single digits year over year, of which all of it is price. So they've raised prices a lot. And if you listen to what they're saying, the reason why they're beating expectations and raising their guidance for the rest of 2023 is because they expected elasticity to be higher. In other words, they expected consumers to buy less because the prices were increased. And they didn't. Volumes were down a little bit, but the consumer was remarkably strong. And that's a really important point because it shows, A, that the consumer is stronger than even, very well-informed business management teams assume the consumer to be. And B, it tells us something about what businesses are afraid of and what they're now less afraid of. Because that tells us what business spending is going to do. And that's the big cyclical driver of the economy. So if you're a Hershey and you're running down your inventories, you're worried people are going to buy less chocolate because you just jacked up their prices 9%, and then you say, hey, it wasn't that bad. 2023 is looking pretty good. Are you going to spend more or are you going to spend less?
Well, that particular anecdote is good for our long cocoa position, but let me play the role of the simple son at the Passover Seder and ask, when you say services, what exactly do we mean there? I think I know what you mean, but I want to give the listeners and those who don't follow this stuff super closely, who are more on the geopolitics side, when you say services, like cost of services are increasing, what do we mean specifically?
Services is restaurants, travel, hotels, business services, legal, advertising, anything where you're not buying a thing.
And why, why would that be increasing more now? Like, why is the shift from goods into services being the thing that increases? Because goods, obviously, if we're talking about food, we can point to fertilizer or supply chain disruptions or things like that. But there's no supply chain disruption for the provision of legal services in the United States. So is that just services, the people who run those businesses have been experiencing and they want to hike their rates accordingly and people just don't have anywhere else to go? Like, why is that the thing that is stickier and seems to be going up?
Yeah, it's totally because of the labor quotient. And I should have been more clear about this. So think of a business like Chipotle, right? The cost of your burrito at Chipotle, if you look at the costs that go into that, roughly 33% of that is the actual food. 33% is the people, which is very, very high. The people serving it to you, I mean, not all the people behind the scenes. And, 33% is everything else. So the labor, component, especially in lower level services, lower value add services like restaurants, things like that, it's going to be driven. The inflation is going to be driven by wages and wage inflation. That's the big reason. Whereas a goods business is much more driven by the inputs that are going into the physical thing.
I have burritos as a service now stuck in my head. That'll be the next big thing in corporate America. Well, so it sounds like you're like nothing. I mean, there was also the other sort of big news, I think, from the U.S. macro cycle here, and I'll tee this up for you because I think I know what you're going to say. Was the return of the banking crisis and First Republic and people freaking out about that again. You want to just do 30 seconds on why you think that's also overwrought?
Well, I mean, First Republic is one bank. And I think last week we gave a bunch of indicators for why we're not seeing real systematic stress in the financial system. And all of that is still true. So First Republic is experiencing major problems as we speak and may not stick around. But interest rate expectations went down a little bit, and now they're going back up again. The 2-year Treasury bond dipped earlier this week, and now it's going back up again. So no big deal is the analysis in a nutshell.
What else do we need to touch on with U.S. macro? Should we move further abroad?
Why don't we move further abroad? But just to round up the U.S. macro thing, I think it's important to emphasize, like, if this plays out as we think it's playing out, as far as like, hey, we just had a slowdown and we might be ready to reaccelerate, then that has big implications for interest rates. It has big implications for the US dollar. And, for our audience who's primarily into geopolitics, that is a big, big deal. Especially like if you look on this little dollar weakness that we've seen in the last few months, you've seen some marginal borrowers come into the market and tap bond markets again. That is going to be challenged if the dollar strengthens and nominal rates go up and the Fed starts talking about fighting this specter of inflation again. That's going to have it's going to create a major problem for a lot of countries.
Well, speaking of the Fed, not a very good week for Jerome Powell, because apparently in January, some Russian pranksters set up a phone call between Jerome Powell and they were claiming to be Ukraine's President Zelensky. This happened to Macron actually in 2019. I was looking at like when this happened previously, but it does not give me much faith in the Federal Reserve that somehow Jerome Powell cannot screen his phone calls. And maybe we should be phoning the Federal Reserve and offering geopolitical risk services to them, because it's not that hard to figure out who's on the other end. And he, by the way, he should be skewered in the media for this thing. I mean, just think of all the crap that Sarah Palin took with the Russia from my backyard and all these other sorts of things. Like, I don't see him getting skewered, and he should be. And it should be a really disturbing sign about like levels of competency and security in the U.S. government. It's a funny story, but it's also not a particularly funny story. But as we move further abroad, Xi Jinping actually had a real conversation with Zelensky, because apparently China is immune to the Russian pranksters. And there's not a whole lot to say out of the conversation, but this is a call that we've been waiting for literally months. It looks like China is going to send a special envoy to Ukraine. Now that envoy was based in Moscow for 10 years. He's probably going to talk the sort of Russia-Chinese line, but the lines of communication are open between Ukraine and China. And I think that's really interesting, because the entire narrative this whole time has been, okay, China's supporting Russia and China's propping Russia up, and they're not really intervening or saying anything against the war. And maybe it's wishful thinking on my part, but I wonder if this is, the optimist in me says, is Beijing looking at Ukraine's counteroffensive and saying, maybe China needs to hedge its bets. Maybe we need to think in terms of, if the counteroffensive is effective, we need to have some kind of relationship with Zelensky and Kyiv going forward, so that we're not completely left in the dust. Maybe it also has something to do with, maybe China thinks they can do what they did with Iran and Saudi Arabia with Russia and Ukraine. I doubt it, but I think that's an interesting data point, especially as we get into all this talk about the grain deal and there's all this Turkish elections, which is something we're going to talk about as well here shortly. I mean, all these things sort of come together, and I thought it was worthwhile just to say that phone call happened. Maybe we didn't learn that much out of it, but I think it's important that Ukraine and China are now talking to each other directly. This is not just Xi Jinping and Putin hanging out and talking about their no limits friendship.
And let me ask you, you've spoken a lot about China's view of the world, and I always love that map that you show, showing China looking out at the ocean surrounded by U.S. allies and historical enemies. If China is trying to diversify its supply chains, Belt and Road and the old, the new Silk Road, and go out the back door essentially through Central Asia, how important relative to even 5 or 10 years ago is Russia or Ukraine or that general region to China? Do you think it's a priority for them?
I think it has to be a priority for them, and it has to be a priority for them for a couple of different reasons. The sort of like nerdy geopolitical methodological point to make here would be that China is a land-based power and it's a Eurasian power, and it has basically always been a land-based power and a Eurasian power throughout its entire history. And there's a lot of Chinese history to talk about. There are random intervals of different Chinese empires or admirals building fleets and going abroad and doing some interesting things, but those are usually anomalies. Like in general, I mean, just think about some of the when a normal Western observer who doesn't know much about China thinks about China, I'm sure one of the first things they think about is the Great Wall of China. Well, they built the Great Wall of China to keep out the Mongol hordes from crossing the steppes from coming down into China, because that's where the threats were sort of coming from. So no, it's very important, and China's always going to try and secure its flank from that point of view before it can go and be a maritime power. Now, of course, China has to be a maritime power now, so it's not just going to be a Eurasian land power, but there's that point to make. The second point to make is, Belt and Road Initiative and all those other sorts of things. I mean, that's China really trying to link its economic interests with the rest of Eurasia. It's also about trying to find other markets to export all this surplus of goods that they have, until this breakdown between U.S.-China relations, they could just sell to the West and everything would be fine. But when you look at the pace of deterioration in U.S.-China trade relations, it becomes all the more important that China opens up these new markets and can dump their surplus steel and iron and umbrellas and gadgets and electronics and anything else they're doing into these other markets, because every other market helps. The last bit there is just commodities, because if China is going to have this antagonistic relationship with the West, it likes having access to cheap commodities that are important to it. And it also, in case of a conflict or in a sort of worst case scenario, it has to make sure that it has access to some of these commodities. And if it can't get them through the sea and it can't get through the Strait of Malacca and the Chinese Navy is not up to par yet, having those overland routes is extremely important. So this is all very, very important for China. And, I like that China perspective map. In part, that China perspective map, I should say, is also, it's a little bit misleading, because yes, it's sort of Chinese geographic perspective out from the world, but a Western observer is going to see it from their own perspective too. It's a very American thing since World War II to think in terms of allies and defense treaty relationships and containment and things like that. China, in some ways, is much more like the United States was in the late 1700s, early 1800s, when George Washington was exhorting the young republic not to have permanent relations and allies and enemies and all the other things, just to be pragmatic and move around everywhere. When China looks out at that world, it actually doesn't really see allies or enemies. It just sees, if you want to be like the old China would be, we see like vassal states or tributary states that would give us economic benefit. But I think they look out now and they see, this is like economic opportunity and the real thing that China has to sell to parts of Southeast Asia. And you can see this too in the way that the United States is trying to expand those relationships and it's trying to bring people into the US orbit. China's not doing that. China just says, hey, we're open for business. We want to build factories and bridges, and we want to sell things to your economies, and we want to do all these other sorts of things. So in some ways, if you sort of mapped China's real view of that onto that, it would be, we don't care that, okay, fine, like have your stupid base in South Korea. Like we're going to build our military and over time we'll be good. What we want to do is make sure that when you tell South Korea not to sell us shit, South Korea starts twiddling their thumbs, which is what South Korea is doing right now. So that's a long-winded way of saying Eurasia is extremely important for China. But what's really changed for China here in the last 30 years is that really for the first time in China's history, it has to be both. It has to be a Eurasian power and a maritime power in the Indo-Pacific. And there's only one country that has ever really achieved scale like that. It's the United States. That's, in some ways, that's the blueprint that China has to follow if it wants to become that. And it doesn't have the benefit of oceans on both sides of it to protect it from less savory things.
So speaking of the Silk Road and Central Asia and trade, maybe it's a good segue into Turkey, or do you want to anything else on China?
That sounds good. I started with that joke about stomach bugs. So what's happened this week in Turkey, never a dull moment in Turkey, is that President Erdogan was giving a TV interview, and he halted the interview, and there was some weird sounds on the microphone, and he went away for a while, came back and said he was suffering from a severe stomach bug, did 10 more minutes of the interview, left, and then canceled his campaign events. First, it was just for Wednesday. He now has also canceled his events, even some virtual events that were scheduled for Thursday. There has been no shortage of speculation in social media and everywhere else about what's going on. Everything from a stomach bug to he's been hospitalized with a heart attack to I even saw one ridiculous report of misinformation saying that Putin had poisoned Erdogan. That's not what happened. I'm just trying to give you the full range of uncertainty and lack of good information that is out there. The thing to note is that we're 17 days before the Turkish election. May 14th is the first round of Turkey's elections. The polls have been relatively unreliable from my point of view, but one poll that was put up by Premise and Al Monitor, which both are sources that I respect, had Kılıçdaroğlu and Erdogan sort of neck and neck at 45% each, and then like a little 10% undecided pot. Erdogan is a wonderful political campaigner and an excellent politician, and this is the time when he usually makes up the ground. This is the time when those political virtues start to come out, and I can't imagine that it's going to be good for him to be seen as being weak and having health problems here just going into the stretch run of the election. So I don't want to speculate too much about his health. For all I know, it really is just a stomach bug and he'll be fine. I think it's actually, it's surprising to me that foreign leaders don't more often sort of get sick and have to go away. I mean, I literally just spent a week in bed because I had a bacterial infection. Maybe they have better healthcare than I do and they don't have to wait a week to figure out what's going on. So maybe it's nothing and maybe he'll come back in line. But the spectrum of what could happen here is huge because it could affect Turkish elections. And if something really is wrong with him, suddenly elections don't matter that much. Suddenly we're dealing with a Turkey that just lost its steward of the past 20 years, which would be a big deal in and of its own right.
It reminds me of when Ronaldo got mysteriously sick right before the 1998 World Cup final. Exactly.
I don't remember that.
Exactly
what
the same. No, I'm just joking. But yeah, equally big stakes, equally bad time to get mysteriously ill.
Did Ronaldo play? I mean, for me, the cultural totem that there would be, Michael Jordan in the flu game, but Michael Jordan played and scored 40 points and single-handedly defeated the Utah Jazz in that game.
I forget if Ronaldo played or if he played terribly. I should know this, but hopefully that's not a foreshadowing of Erdogan, depending on your sympathies. But let's talk about structurally what this means and how we're thinking about the election, because this is something that we discussed at our research meeting yesterday. And full disclosure, we don't have any positions on for any of our clients in Turkish stocks or the currency right now, even though we've been very bullish on Turkey long term, and we've had significant positions for clients in the last few years, which we've talked about. So we're heading into this trying to figure out what to do. Maybe why don't you set the table for how others might be thinking about this, and we can talk through the different issues of what happens in the different scenarios.
Yeah, I mean, this is such a rich topic and we could do hours just on this, but I think the key thing to sort of keep in mind is that when Erdogan first came to power at the end of the late 90s and the early 2000s, Turkey was in the midst of an economic crisis. It had a banking crisis and high inflation. And Erdogan came in and really, I mean, he led the fix of the economy. And he did that by embracing orthodox monetary policy and doing exactly what the IMF said and really turning Turkey into a modern industrial powerhouse, really the only one in the Middle East and North Africa. If you go back and look at GDP or the makeup of the major economies of the Middle East. So think Turkey, Saudi Arabia, Iran. You go back to the 90s, they're all starting from roughly the sort of same starting point, and you fast forward about 20, 30 years, Turkey has far surpassed them. Saudi Arabia has done okay because of oil, but they're only just now getting into, we need to diversify, we need to manufacture products, things like that. Turkey's stealing market share today from the European Union and from China for things like cars and other manufactured products. So Erdogan oversaw that, and he also oversaw really the stitching together of cosmopolitan, secular Istanbul and that part of Turkey, and the more conservative hinterlands of Turkey. Really fused those things together because he was also more conservative, and he used Islam to try and tie Turkey together into his own version of a modern Turkish republic that was able to link those two things together. Now, somewhere along the line, Erdogan sort of jettisoned those policies as things were doing well to increase his political power. And it was less about maintaining growth and more about rewarding cronies or rewarding those interests that had supported him over time and who were supporting his attempt to centralize and increase the power of the presidency over time. And that's where you get the last couple of years. Whereas 10, 15 years ago, the narrative on Erdogan was, hey, this is a good guy. You can trust him. Turkish economy looks great. He's restored stability. Like, we love this. Foreign investors want to be there. Now Erdogan is seen as this crazy guy who has stomach bugs in the middle of interviews and gets his monetary policy from the Quran, not from the Turkish central bank, and all these other things. I say that just to say, like, the shift on Erdogan in that 20 years shows you kind of the ebb and flow of geopolitics and ideology and the way people think about things. Erdogan's also overseen the rise of Turkey really as a more independent, pragmatic power from the point of view of foreign policy. So, I mean, most people experience Turkey since the Cold War as this staunch U.S. ally against the Soviet Union and later against Russia. Turkey's much more pragmatic now and much more about expanding its influence. I give you all of that wind up because what's at stake here in this Turkish election is really the future of Turkish democracy and what Turkey is going to look like. I don't think it's the future of whether Turkey's going to have success. I think Turkey will have success either way. It's just what flavor is that success going to have? What is the tone and the disposition and sort of the alliances that Turkey is going to have, I think, is going to be based on this. Because if Erdogan wins here, if he gets more than 50%, he can really complete the centralization of power. And that executive presidency, which he pushed through and which he had installed, will probably become the sort of future of Turkish politics over time. And it could have, we're not here to say whether it's a good thing or a bad thing, but centralization of power, strong executive president, whether it's Erdogan or someone else, solidification of the AKP's power, all these sorts of things. If Erdogan is not going to be there, though, if he's going to experience what the leaders that he usurped did, which is, hey, you mismanaged the economy and all these entrenched interests are not so good. We want to go to the opposition, which is promising, hey, we want normal monetary policy. We want to get back to having foreign investment. We want to stabilize the economic situation. We want our relations with the West to be good. Stop messing around with blocking Sweden from NATO and all these other things. Stop flirting with Putin. Yes, we can be pragmatic, but we don't have to look like a Russian lapdog. That's sort of the other thing. And the other thing the opposition has promising is they're going to reverse this executive presidency. They want to go back to a more empowered Turkish parliament. They want to go back to the way the system was before Erdogan came in and made all these changes in the 2010s to solidify his power base. So that's really what's at stake. I think the non-ideological thing that we keep saying, and which I think is the differentiator for us, is it doesn't really matter who wins in terms of Turkey's economic performance over a 5-10 year time horizon, or in terms of assessing Turkish power over that 5-10 year time horizon. Turkey's a rising power. It's going to have economic outperformance. It's going to assert its own foreign policy interests more pragmatically and more independently over the next 5 to 10 years. What's at stake is really the character of the Turkish nation state and its politics and all those other things, which is one of the reasons I think it all gets jumbled up. So hopefully that wasn't too long and rambly, but that's the chessboard. That's what's at stake here and why this particular election is so important.
Just to put some meat around something that you said, it's one thing to say, oh, Turkey's going to do well no matter what. But that's something that always struck me about Turkey relative to other countries. So look at Brazil, for example. Brazil, much like Turkey, has sort of seesawed in extreme directions of policy and, industrial policy versus laissez-faire and all sorts of experiments throughout the years. And they've experienced these huge booms, and then they'll have 15, 20 years of just depression, like terrible GDP declines, just disaster, right? And that's what they experienced really post 15. It wasn't a depression like the 1980s were, but it was a really significant down period. Turkey is very similar, right? As you point out, like they've oscillated over time between sort of Western approved Orthodox policy versus, more inward looking import substitution, that sort of thing. So, and talking about how the US can influence them is something I'd like to do in a sec. But the thing that strikes me, getting to my point, is Turkey's growth never changes that much. Like it accelerates a little bit and it decelerates a little bit, but Turkey is so steady as she goes. Like if you look over a long period, like GDP growth just averages like 3.5%. And sometimes it's a little more than that when things are really good. And when things are really bad, it's like 2%. But you don't experience these just terrible, decade-long shitstorms in Turkey for whatever reason, even though the policy would seem to be completely wild and crazy and the currency's going all over the place. It's a bit of a mystery, but there's something inherently stable about Turkey, is my point.
Well, I think what's inherently stable about Turkey is the geography. The shitstorm that you're talking about was World War I. So, like, the Ottoman Empire had a really, really powerful position, so powerful that it sort of rested on its laurels and then eventually came apart when it was part of the wrong alliance in World War I. And the Turkey that we're seeing today, it's really only just now getting back to the position where it was before World War I in terms of power and economic influence and all these other things. But the thing is, whether it was, Byzantium or the Ottomans or anybody else, if you control the Bosporus, if you're on Istanbul, you're at the center of one of the most important trade routes in the entire world. One of the reasons we're talking, the Black Sea Grain Initiative, most people are talking about Russia and Ukraine in the context of the Black Sea Grain Initiative. The Turks are the gateway to the Black Sea. None of this stuff that we're talking about in the Black Sea means anything if the Bosporus is not open. It was bad for the Ottoman Empire and for Turkey in the long run when you could figure out how to get around the Mediterranean. There are ways around the Mediterranean in terms of trade flows, and when technology meant that you didn't have to go through the Mediterranean to have trade, like that posed a major challenge to Turkey, but that's still the most efficient way to actually trade things. And this is one of the ironic things about Turkey. I mean, they sort of they don't necessarily need globalization, but we were talking about China and Eurasia. That stitching together of Eurasia, that trade between Europe and China and North Africa and China and the Middle East and all the Caucasus and Central Asia, all these places that we really haven't talked about for decades when it comes to geopolitics. Turkey is the center of all those things. Turkey is the land bridge between all these things. It's the strategic point between all of them. It's why the Romans picked Istanbul for the new Rome when it was on its last legs. It's why the Turks, the Turks are descendant from their own hordes that came down. They settled in part where they did because this is really, really advantageous geography. So I think that's what's not changing here, and it allows whatever power is going to be there to have a certain level of wealth. The interesting thing here is that, and this goes back to the multipolar thesis, if we're right about our multipolar thesis, and if this is a really great tangible example, then a country like Turkey that is on this strategic geography and has these geopolitical strengths is going to do incredibly well. And if you're thinking in terms of bipolar world or unipolar world, and you sort of miss, oh, there are these geographies that are going to be very important, like you're going to miss massive opportunities. Because, Emre was on this podcast a couple weeks ago. We're going to have him back to talk about election reaction, and he talked about Turkey being, one of the, I forget the exact phrase he used, but it was something like, one of the greatest, booms that you could probably ever get if you got some kind of election result here. I think our key point is like, yes, you could get a pop based on the elections, and we're throwing around ways to try and capture the pop, but it's a boom no matter what happens. Like Turkey's a market you want to be in over the next 5 to 10 years because they're going through the bad part of the cycle. The next part of the cycle should be good. Like let's say AKP wins more than 50% of parliament and Erdogan remains president. I bet you they're going to go back to orthodox monetary policy at that point, even if it's Erdogan. Like all the stuff that we've seen over the past 4 to 5 years. Once he solidifies what he needs and he now needs to think about growing the economy, I'm sure he'll go back to trying to solicit foreign investment in general. And maybe he'll solicit more yuan than he will dollars, but it'll still be sort of net positive for Turkey.
Well, I guess that's what I find so striking. And I think Turkey in some ways is the greatest proof that geopolitical analysis really matters for investing and doing kind of longer term forecasting like we do is like, just like you point out, like Turkey's geopolitical fundamentals are kind of like this lodestar. And if you look relative to the United States, Turkey bottomed in 1950 or so, after the First World War, like you mentioned, where the whole, like it was, they lost 25% of the population. It was obviously a huge disaster. But since that bottoming, it's just been ticking up, and they've been closing the gap in periods, no matter what the policy is. And even like you mentioned, now is the bad part of the cycle. Like Turkey's still growing. Like people are looking at the inflation numbers and they're looking at, oh, Erdogan, he's this crazy guy and he's put the economy off the rails. Like this is the bad part of the cycle. There's still positive growth. They're one of like 2 countries in the world that grew in 2020 during COVID, which is just really interesting. But so strategically, maybe it doesn't matter what we think is going to happen. Maybe, probably not. I think these geopolitical fundamentals are more important than anything political on any meaningful time horizon. But then on the tactical, I guess that's the real question, because how do you approach the election itself? And I think this is a lot trickier than most people assume. Just buy Turkish stocks if the opposition wins, because I mean we can talk through this, but I worry that it could have the opposite effect, because if you look at the Turkish stock market, the Borsa Istanbul index is up like 5 times in the last few years, and the reason is because of inflation. So all of the local investors are using equities as a way to protect their wealth against the inflation that they've seen. The foreign investor quotient is very low right now. They're not really driving those markets. It's a domestic-driven market. And I just wonder, if the opposition wins, do you get a sort of paradoxical outcome where the equity market declines 25% because people are saying, oh, great, things are going back to normal. I don't have to have all my money in stocks anymore. I can go put them in, my business or do the things that I would normally do because my inflation expectations are turning around.
Well, I mean, we're still thinking out loud through this, but I would say that there are a lot of different scenarios on the table. And another thing here is, there's the presidential election and then there's the parliamentary election. So there's totally a universe in which the opposition figure, Kılıçdaroğlu, wins the presidency, but AKP remains in control of parliament, which would be sort of like Brazil right now, with you've got Lula on the top, you've got Congress saying, we're going to oppose you sort of tooth and nail, and probably not a lot's going to happen. And what is going to happen is going to be a result of compromise. That's actually probably in some ways the best case scenario, because you won't get sort of a lurch too far in either direction. But I think that the scenario that might cause a pop, and I think it would cause a pop because I think it would sort of wet the whistle of foreign investors, would be, what if, in 17 days or whatever, or 16 days by the time listeners are hearing this, what if Kılıçdaroğlu wins in the first round, gets more than 50% of the vote in the first round, and it doesn't have to go to a second round? I think most foreign investors and markets are thinking this is going to go to a second round in June, and then we'll sort of figure out what's going to happen. But if you had that sort of emphatic statement from the Turkish people saying, no, we want to go back to orthodox monetary policy, we are tired of the instability of the past couple of years, if you saw that kind of sentiment from Turks at the ballot box themselves, I think you might see foreign investors come back in and try to come back in quick, and maybe you would see that pop in general. But I take your point. I mean, there are so many different scenarios here, and a scenario we weren't even considering until this week was, what if, I mean, I hope this doesn't happen. I hope he's fine. I'm not saying that I have no special information about Erdogan's health, but what if he drops dead tomorrow? I don't even know what Turkish law looks like. Could he still be on the ballot? Could he still be elected president and be dead? And then AKP gets to, I mean, it sort of opens up this whole Pandora's box of things. So it's not for the faint of heart, but I think there's opportunity in here somewhere for a country that is this important and has this many prospects going for it, and that is at this sort of critical juncture. That's the way to think about it. But you're absolutely right. Like the tactical part, I don't want to say it's fun. That cheapens it a little bit. But the tactical part is interesting. You can try and sort of go one way or another. The important thing is the compass. And so the real thing we're talking about here, and this is why we've had, you mentioned it, we've had big positions on for clients on Turkey before, have done very well with those positions, have taken them off when risks were elevated and we sort of didn't like the smell of things. Long term, we're going to be in Turkey. And maybe there'll be periods where we don't own anything because we want to, protect clients from risks and things like that. But the long term picture here is very good. And it's just about when you want to engage and how you want to engage.
Just to clarify, that is primarily what we're focused on is the long term. Yeah. The short term makes for fun chit chat, but
the short term makes for podcasts, and the long term makes for wealth creation. So like we're talking here because if we sit here and talk about issues that are 10 years in the future, maybe some people will you could use this as sort of a sleep aid if we focused only on those things. But these are the things that are important, so we need to cover them a bit.
And the short term makes for trading entries. I think that's the real issue, because when you have a long term view and then something short term drives prices in the opposite direction, that's your opportunity. So we'll be waiting to see how the election goes.
Speaking of, and we can kind of close out on this because I still need to do a lot more work on this, but we promised at the beginning of the year to focus more on Latin America and more on Africa. We talked about Sudan last week. Sudan's still a huge deal, by the way, and Turkey is one of those foreign powers that is involved in the Sudan conflict there as well. But I have no new insights to offer about Sudan. It still looks like a civil war to me. There have been no moves from outside powers that really scare me yet. But I mean, this is a war that you should be tracking very closely, not least because of the migrant situation that's going to create, the displacement of refugees, food prices in an area. The Horn of Africa was already stressed and facing famine. I mean, I don't want to leave Sudan and say everything's fine. Like this is still in some ways the most important thing happening in the world that nobody's talking about. But I did want to also talk about a little bit of South America this week because over in Colombia, President Petro, I hate making apples to apples comparisons between Latin American countries, but it's hard for me not to because he's showing me Pedro Castillo Peru type vibes. So he dismissed his cabinet and he's appointing loyalists into it and says he wants to move forward with some of his more radical policies, which doesn't make a whole lot of sense because he already didn't really have much support in Colombia's Congress, and he just lost a couple coalition parties with what he did now. It doesn't seem to me like he's actually going to be able to get anything done. And the Peru comparison I make because that was what happened in Peru. Castillo won, but he didn't have Congress behind him, and he kept on butting heads with Congress. And he eventually got so tired of it that he was like, all right, I'm just going to seize control. And then the Peruvian military escorted him to a prison. I feel like you're about to get that sort of gridlock in Colombia here because when Petro first came to power, he was saying all the right things. He was saying, I'm going to be pragmatic. I'm going to make coalitions. I'm going to make alliances. Like, yes, I have this past and I'm personally leftist, but Colombia has to move forward with progress. That's all out the door here, at least the way that he's behaving for the past couple of weeks. I think we could juxtapose this also with what's going on in Chile, another country that we've had a long-term sort of positive view on, which is getting a little bit challenged here because the Gabriel Boric government came out and said they basically want to nationalize Chile's lithium industry. Now, I think it's been overstated, like what Chile can actually do and what's actually going to happen. I think it's opening up negotiations really between SQM and Albemarle and the Chilean government and what this means. And the current leases go, I think it's till 2030 and 2035 or something like that. So we're talking about stuff that's very sort of long in the future. The Boric government is also doing terrible in the polls. You could have a new government come in and reverse some of these things. They don't actually have a constitution yet either. So what happens in the constitution could completely change mineral rights as well. But you can already hear how much more boring the conversation about Chile is, because I'm talking here about constitutions and laws and partnerships between governments and things like that, which is not what you're having in a country like Colombia, where it's like, dude just fired his whole cabinet and he wants to push through radical leftist agenda that he's not going to be able to push through and what kind of goes there. So I'm still sort of bullish in the net on Chile, and we can talk a little bit about lithium too, but those are two hotspots in South America that I think are worth thinking about as we close the podcast.
Yeah, and I think it's worth pointing out that so for every country in the world, we have sort of a system where our clients are in it big, they're in it small, or they're not in it at all, right? And for a long time, you've been writing about Colombia and sort of the fundamental problems that you saw there and saying, like, this is not a place where you want to be. And just to clarify, the Colombia ETF is now making a new all-time low relative to U.S. stocks and relative to international stocks even. So that's been a place that you've wanted to avoid. And I think, kind of the analysis that you've done couldn't predict this specifically, but this as a symptom of what you analyze, you know, it's certainly playing out. On Chile, I spoke with a contact of ours this week, an executive in Chile, and it's funny. He was saying the mood since the September plebiscite that they held has been absolutely buoyant. And this is the same guy who a year ago was saying, "Oh, things are terrible. Everyone is depressed. It's, the country's going to hell." And so I think boring is good. People are very happy about boring in Chile. And you can, that's a big factor in terms of confidence, willingness to invest, all the things that make the economy tick.
No, I mean, Chile has mature and fairly resilient political institutions. I mean, we can go back to Pinochet, but like since the end of Pinochet, I mean, there are not many Latin American countries that can sport the same types of institutional resilience and strength that the Chilean political system has. And in some ways, I mean, I would be more worried about, attempts to nationalize the copper industry. And, the Boric government has talked a big game about copper, but they haven't really touched that. The lithium thing, I don't know. I have trouble getting too excited about lithium, in part because there was so much excitement about lithium that now lithium prices are in the dumps because there's now too much lithium out there. And it's also, we've sort of seen this movie before. Like I wrote a piece, God, that was 2021 now, probably summer 2021, talking about the lithium triangle, which is Argentina, Chile, and Bolivia have some, I forget the exact number, but some ridiculous percentage of lithium reserves are in a triangle between those three countries. And there was talk about trying to create some kind of OPEC-like cartel around lithium in general, which sort of makes sense. Oil was what's powering cars. If you're going to electric vehicles and using lithium batteries, you would expect these countries to sort of re-rate the value of this commodity and how they want to use it and how they want to, figure out how the government and the people can get the most benefit out of it. So the flip side, though, is I'm just less convinced that electric vehicles is where it's at, in part because you need all sorts of commodities like lithium that you're going to, it's not just lithium. You're going to have to go get a bunch of other different mineral commodities around the world and deal with a lot of other governments who are going to want to nationalize and cartelize and all these other sorts of things. So I think it would have been much more concerning if Chile was actually able to make some progress going after copper, because copper is much more clear. Like we already use copper for a lot of different things, and we're going to need a lot more copper going forward. Whereas lithium, I can like trace the bull case for lithium, but it's not as completely clear as sort of the bull case for copper. So in that sense, I almost view it more as a speculative bet by the Boric government in a way to talk about the Chilean government's relationship with mineral commodities in a more, I don't know, in a deeper, sort of more substantive way. Again, juxtapose that with Colombia, where Petro, even though oil was one of Colombia's biggest exports, he basically came in and said, no more hydrocarbons, no more oil, no more coal, no more investment. We're going to stop all this. We're going to embrace like renewables and green energy and things like that. Like maybe someone in the Sierra Club cheered, but if you're exposed at all to the Colombian economy, the Colombian president just came in and said, I just gave a middle finger to like the main portion of the Colombian economy. So the point being, the situation in Colombia looks really bad. And it's also, I think it's a differentiator for some of the things that we do. If you're an investor, or even if you have like an IRA or something like that, you might be in like an international mutual fund or an international ETF or something like that. But when you actually pull the hood back and look at what companies or what countries you're exposed to, you'd probably be like, you're not actually diversified by country at all. So the strategy that you talked about that we're creating is really about trying to create a true international strategy that, and like you said, you can have these big relative gains. Like Colombia is making new lows against the United States. That's a place where you can sort of really push advantage if you're thinking about it that deeply. I don't think most people are thinking about it that differently. Most people, there's this off the shelf international ETF. Okay, great. I'm going to put it there and I'm going to go play 9 holes of golf. Like one of our big differentiators is, no, geopolitics is going to affect investing, and this is how you do it. go overweight countries that are good, go underweight countries that are bad, change that based on sort of things that are happening geopolitically when you have good entry points or when you need to exit because something goes against you in that particular way. I don't think there are a lot of companies or advisors out there that are doing this sort of thing.
I mean, all you have to do is go to the Cognitive Investments website and look at the white paper we wrote on geopolitics and investing, because we put together the data on the dispersion between the different countries, and the dispersion is extraordinarily wide, and it's getting wider. So the difference between picking the best country and the worst country is like 60 percentage points in a particularly volatile year. That's being up 20 versus down 40. That's a pretty big dispersion. So it matters to be in Chile and out of Colombia, or whatever that the winners and losers may be in any given region. But just a few things on Chile and lithium, because I don't really have much to say about the nationalization, and it's a little bit unusual because I agree, lithium is still a nascent industry, and you don't usually see nationalization talk until an industry gets more mature.
It's a cash cow.
Yeah, like look at oil in the 1960s and 70s. Like they didn't start seizing oil fields for national oil companies until they were gushing money. So that's a little bit weird, and it's not clear that it's going to go anywhere. But a few things on lithium. So yes, the price of lithium is down about 50 to 80%, depending on where you look and what benchmark and what time period. So it's really collapsed after running up in a major way. But the thing to keep in mind is that lithium is an extremely deeply cyclical market. And this is usually what you see with one of these nascent commodities, is you see huge oscillations. So we made a bunch of lithium investments in 2020. And at that point, it's hard to remember now, that was in the last trough of the cycle when everyone hated lithium and the price was collapsing. And it was, there's way too much lithium being produced, and the cars that are going to use it aren't going to show up for years, and we're all screwed. That is the sort of Wild West kind of oscillations that you get in this kind of commodity market. And one of the ways to really think about it from a long-term investment standpoint is identifying long-term sources of demand that are driven by innovation, because this is going to be a major market. And then waiting for those periods, maybe like today, where you're in the trough of despair, and selling when everyone says, the prices are they've already doubled and quadrupled and they're going to go up another 10 times, because that's how crazy lithium is. Chile is particularly well positioned because what's happened in lithium in the last 2 years is the lithium price exploded, and a lot of supply came online in response, but it was not the kind of supply that Chile produces. So there's two different ways to get lithium. You can use the pools, which are everyone I'm sure has seen these pictures. It's like the beautiful aquamarine tiles that you see from way up in the air. That is a long process that takes 5 to 7 years to set up one of those and get lithium out of it. And there's a big upfront cost, but the cost of getting the lithium once you build the pool is very, very low. So high upfront cost, very low marginal cost. By comparison, all of the new lithium that's been coming online and driving the market into a collapse in the recent period is mined lithium from Australia and China. And that has a very different economic profile. It's much less attractive because you have to spend a lot of money to mine every bit of lithium you get out of the earth. It's not like the pools where you spend the money up front and then it's basically costs you almost nothing to harvest the next batch of lithium. So in many ways, Chile is the low-cost producer. Chile is like the Saudi Arabia of lithium, because Saudi has these fields already. It's super cheap to get the oil out of the ground. Chile is in kind of the same position when it comes to lithium. One other geopolitical point on lithium, which is related to this, So one of the things that people are freaking out about with lithium in the last few weeks is the potential that, oh my God, maybe cars aren't going to use lithium ion batteries, or maybe it won't be the dominant technology, because CATL, the Chinese battery maker, made an announcement that they have developed a sodium ion battery, which is small enough and energy efficient enough that they're going to use it in a vehicle in a joint venture with BYD. And this is a big deal and worth watching for those of our listeners who care about new energy and transport and stuff like that. Because previously, sodium ion batteries were never viewed as energy efficient enough to be used in vehicles. They're very cheap, but they're not very dense as far as their energy capabilities go. So this is an interesting milestone. But one thing that's interesting about it as well, we'll see if, where the technology goes and whether this is just like a pilot or it actually turns into something that's applicable. I don't think anyone really knows yet. And the people we've talked to in the battery industry have said like, well, we have to wait and see because there's some skepticism, but we don't know exactly what they're doing. But one thing that is interesting is Tomas on our innovation advisory board, who does a lot of work with us on minerals, materials, supply chains, and we're going to be talking a lot more about that in the near future. He has pointed out something really interesting, which is that the world's largest supply of sodium carbonate is found in the U.S. Over 90% of the world's reserves of sodium carbonate is in Wyoming. And sodium carbonate is what you need to make these sodium ion batteries. China makes their own sodium carbonate from coal ash, which is about as clean as it sounds.
Yeah, that sounds clean.
But that's very problematic, and they have pollution and regulatory issues that they're really struggling with. So it's kind of funny to think that China developed this battery, and it may end up being that they're somewhat dependent on the U.S. as a source of the input for this battery. How the tables have turned.
Yeah, although that would be a net positive because that would be technological and scientific progress from China. And if that's true, it would eliminate the United States as a competitor. So then China can just be the top consumer for Chilean and everybody else's lithium, while the U.S. has fun with whatever it's going to do in Wyoming. Which is really, the Chinese sort of story in general is they want to be the center of economic gravity. They want to be the one that consumes, and they want you to be dependent on them because they are the one that is consuming. They are the center of the economy. So it would redound to them eventually, even though I appreciate the irony of what you're talking about. Well, I think that's a good place to stop it, unless you have anything else you want to say, Rob.
No, I think I'm good.
Okay, well, listeners, I wish you a week of no stomach bugs, of no Turkish stomach bugs, and if somebody calls you and claims to be President Zelensky and he wants to speak to you, maybe hang up the phone. Maybe don't listen, okay? Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.